President Trump returned from China with a trade deal. What happened and what does it mean for investors? Plus, the latest on the Fed and a surprise on who is in the running to succeed Jerome Powell. Barron's managing editor Matt Peterson joins the panel. Matt, great to see you as always.
Jack, good to be here.
So Air Force One logged a lot of miles this past week. President Xi, President Trump got together. What are the big takeaways?
So the big takeaway was that they did just enough to keep the markets happy. There were not a lot of big surprises out of this meeting, but there weren't a lot of big negatives either. They took the sort of threat of rare earth mineral restrictions off the table. So that means, we could keep making batteries and chips and all the rest of that good stuff. None of the big flashpoints came up, Taiwan and other stuff. Bottom line, this is a ceasefire in which nobody gave up any ground.
A truce. So there have been so many threats of tariffs, actual tariffs, tariffs taken off, tariffs put on. Can you level set where are we now compared, after this trip compared to a year or two ago?
Yeah, you got to get your spreadsheet out to keep track of these tariffs. So we are back a couple of weeks, but not all the way back. So in this deal, the United States reduced tariffs on China by 10 percentage points. That takes us down from 57 to 47. We were talking about going plus 100, so it's better than that. The other big thing is that China agreed to buy our soybeans again. Of course, I said again because they were doing this at the beginning of the year and then stopped because of the trade war. We keep the rare earths flowing, but that was the plan all along.
So, Jack, I know you're always interested in farms,
I just
right?
think when you put it all together, who's winning? Put it in WrestleMania terms for me. Who's winning? Who's losing? Anyone get hit by a folding chair? What's going on?
There were no folding chairs.
Okay.
It's really kind of disappointing. If you watch Xi Jinping talk, he's really kind of dry. It would rather watch wrestling. But look, the Trump administration, President Donald Trump said that this was a 12 out of 10 deal. He's very happy with how this went. You look at what was actually agreed to here. China didn't really give anything that they hadn't taken away in the first place. We cut our tariffs. So, I'd say that this is probably a win for China, although it's a, one battle in a long-running war. We'll keep having this fight.
What's the latest for farmers? I know they've been struggling lately.
Yeah, it was a tough, season for farmers. So if you're a soybean farmer, there was good news in this deal that your harvest isn't going to go to waste. That China is going to continue to buy those soybeans, and other countries in Asia are going to buy some of those soybeans. But if you're, if you're making beef in this country, if you're a cattle rancher, the story is a little different because the Trump administration is looking at letting Argentina sell more beef into our market to bring down prices, which of course means lower profits for cattle ranchers. So this is a mixed story.
Good news if you like ribeye. Let's pivot, Matt. You are watching the Fed carefully. They met this past week, as expected, quarter-point rate cut. But what else did you see below the surface?
So the sort of below the surface story on the Fed is that all of a sudden everybody at the Fed is pointing in different directions. When you watch the press conferences, you just hear from Jerome Powell, but we had two dissents this time in the vote that actually makes the right decision. Somebody wanted to cut more and somebody wanted to cut less, and that just makes it a little harder to predict where the Fed is going to go next.
I don't think that's a big deal. There's always some dissent on the Fed. And I think a key takeaway is that Jerome Powell said that a rate cut in December, which the markets were banking on as a near certainty, is now not a foregone conclusion. So you've moved to about 70% chance of a rate cut in December. So the pace of rate cuts over the coming quarters could be less than what the markets are expecting. What's your thought on that?
Yeah, I think that's right. And, we've got a Fed chair change coming at the end of the year, in the middle of next year, and that's likely to push rates down again.
So take us to that. It's the horse race. There were the two Kevins. Anyone else in the hunt?
Yeah, all of a sudden there's somebody new in the hunt, and it's someone that we've heard from before. So President Donald Trump surprised people on this Asia trip by saying that he was considering Treasury Secretary Scott Bessent for this job of the next Fed chair. And that's a little surprising because this would be a Dick Cheney move. If you remember, Dick Cheney was in charge of finding George W. Bush as vice president and then ended up becoming the vice president. Scott Bessent is in charge of the search for Fed candidates. He said he doesn't want the job, but all of a sudden he's back in the running again.
Yeah, that is interesting because Cheney wanted the job. Bessent says he doesn't want it.
And the two others are what, Kevin Warsh and...
Kevin Warsh and Kevin Hassett are the other two front runners.
Do you think it would make much of a difference to the markets depending on who gets that job?
I think the markets would be very happy to hear from Scott Bessent. I think he's very well respected and credible. And like I said, they're all doves. They're all going to push for rate cuts, but Bessent will be a sort of familiar and stabilizing figure if he does.
Yeah, Wall Street seems to have a lot of comments. Matt, thanks very much.